Okay, we're going to just finish off continue working through our statement of financial position. So we're just finishing off the depreciation, and then we're going to get started in on the statement and all its notes. So we just need to put in the depreciation for our warehouse equipment. So the debit is the depreciation of 9,000, and we're going to add, the credit is adding it to the accumulated, so we get 59,000. Now, on our additional information, we've got some information about a vehicle being sold and a new vehicle being purchased, and we're going to add that to our note, in particular our PPE note, our property, plant and equipment note. So now we're going to put together the statement of financial position, and it includes all our assets. Now, in your notes, so in module 2, you have the framework of your statement of financial position. So basically it's our assets divided into current and non-current. So current are assets that are going to be turned into cash within a year. So things like our petty cash, our bank and accounts receivable. Our non-current assets we're going to have for a bit longer. So that's our property, plant and equipment, investment assets like shares and intangible assets. And we usually get things like goodwill or patents. Okay, then we have our liabilities. So current liabilities, the ones that we expect to be paid within the next accounting period. Non-current liabilities, of course, we're going to pay later. And this is the basic framework of a statement of financial position. On page 9 of your module, you'll find a set up working framework for a statement of financial position with the notes as well. So let's go back and actually work through that. Right, so first of all, it's got three lines, so 3 columns. So they're for our collating of them. So first of all, we're going to put the title up. So name of the business first, Garden Warehouse. Statement of financial position for them. And be aware, because this could be actually missing in the exam, and you might actually need to put in the title. And it's always as at 31st of March 2013 for this one. Okay, so our first thing we're going to deal with is our current assets. And in our current assets, we're going to start with accounts receivable. And we're going to start with its note. Now, when we did the accounts receivable, accounts receivable standard, we knew all about the use of doubtful debts. So our first note is accounts receivable. So here's our notes to them. And notes are to remove the clutter from the financial statements. So our first note is about accounts receivable. And so we're going to take accounts receivable. So we're going to take the amount that's in the trial balance, the 32,000. So it's less the bad debts. So that's how much we should be able to get, but we know that not all our customers will pay us. So we've got to allow for doubtful debts, so less our allowance for doubtful debts. And that is 1,600. Okay, and we're going to get our calculator up. No, we don't want it that big. Okay. If we can change it so it's a bit smaller. Let's go for a standard one. It's still quite big. Okay, so we want to do 32,000 minus 1,600. Okay, so we get 30,400, and this is the amount that we're going to record in our statement of financial position. So we're going to put that in the first column because we've got a few others that we're going to add, so 30,400. So now we're going to go and pick up the other current assets. So these are the things that are, that we can turn into cash in a year. So these ones here are all expenses, but we've got bank. So we're going to put bank in, and that's 2,000. So remember, all our expenses will go in our income statement. Cost of goods sold will go in our income statement. This is a long-term one. Expense. Drawings we're going to deal with later. Electricity, we're going to deal with shares later. An expense. Inventory is our next one, 36,000. Okay. Office wages and expense. Office expenses. Warehouse buildings we're going to deal with later. Warehouse equipment we're going to deal with later. Warehouse wages is an expense, but we're going to bring in accrued income, which is a current asset. Okay, 1,200. Doubtful debts expense, and then we're going to bring in our prepayment of 3,000. Now, our two depreciations are both expenses. So remember, on our debit side, we have our expenses and we have our assets. So this is all on the debit side. And on the credit side, we have our liabilities and our income. And so our expenses and our income go in the income statement, but our assets and liabilities go in our statement of financial position. And of course, we've got equity or capital on this side for our equity, and we've got drawings on this side for our equity, and we'll deal with those in a minute. So they're our equity stuff. Okay, so we need to, and we'll deal with those when we get to the end of the statement of financial position. Right, so we're going to add up our total current assets. So we've got 30,400 plus 2,000 plus 36,000 plus 1,200 plus 3,000. We'll come to 72,600, and we're going to pop that in the next column. Right, now we're going to deal with our non-current assets. Okay, so our first non-current asset we're going to deal with is our investments. Right, investments. And so these are if we've got any shares or bonds in some other company, and we've got shares in Briscoe Limited. Now we had a Briscoe Group Limited. Make sure you use the whole name that's used in the trial balance. Now we're going to bring it in at 30,000. I'm just going to shift that across actually, because I need to put a note in for it. Shares. Okay, so we're going to bring a note in. In our statement, we're going to put it at 30,000, but our note, we're going to recognise this fact that it has a current market value, fair value of 34,000. So you just have to remember a little sentence for that. Okay, and we will do that in the next video.